Great, thank you so much, and welcome everyone. Really happy to be here with you today. We have a brief 45 minutes together, so I've got a quick presentation for you. This is on my favorite trade setup. We've been using this here at Trade and Wins for many years, and it's been working exceptionally well, especially lately. Now, just a bit about us here at tradeandwins.com before we get into the meat of the presentation. We're a group of pro traders with over 30 years of experience. We're actually real traders and real teachers. We've been developing our own strategies and trading systems for many, many years and have been teaching people around the globe from complete beginners to experts. In the presentation today, I've only got about 10 slides for you. I'm going to spend very, very little time on the PowerPoint presentation and spend most of the time we have together on my live charts, okay? I'm going to give you the money management rules that myself and the other traders here at Trade and Wins use daily. I'm going to tell you exactly what you're going to need to trade this setup I'm going to show you. I'm going to give you the specifics of this setup, and then we're going to bring up my live charts and review some charts together. Now at this point, if any of you have any favorite stocks or Forex pairs or anything that you want me to pull up a chart on, and when we get to that point in the presentation, I'll ask you to enter the symbol into your chat box, and we'll review the charts together, okay? And we will also leave some time for Q&A at the end so we can answer all your questions. Now, just before we get into this, a couple of quick poll questions, just so I know who the audience is and I can tailor my examples to you specifically. If you can please let me know which market you do prefer to trade most. Is it stocks, options, futures, or Forex? If you could just take a few seconds and enter that into your chat box, I'd really appreciate it. Great, thank you. I see them coming through. Ron, Stephen, Gary, thank you very much, all of you. That's great. Okay, we got a real nice mixture. Excellent. And also, while you're at that, one more question here. On average, how many trades do you place per month? Is it 1 to 10, 11 to 20, or are you extremely active? 51 to 100, 100 plus. If you could just let me know. Ooh, we got a few hundred plus. Is awesome. Excellent. Some very active traders. Okay. I think you're going to enjoy what we're going to go through today. A bit of the legal stuff before we get into it. Trading is a very difficult and serious business. It takes many, many years of learning and practice to really hone your skills. And if you don't educate yourself, you will get yourself in trouble. So, having said that, if you do educate yourself, there are ways to really minimize your risk. And that's where we're going to get started today. The money management rules that we use here are all geared towards minimizing risk while maximizing our gains. So, number one rule, never trade with money you can't afford to lose. I'm sure you've heard this many, many times, but it's one rule you should always follow. Also, trade with an amount small enough that feels completely insignificant to you. Whether that's a couple $100s or several thousand, it doesn't matter. The amount does not matter. What matters is that it feels completely insignificant to you. When it comes to trading, it's much more important on how you manage a trade once you're in it than it is at picking the entry point for that trade, okay? And how you handle your emotions will dictate how you handle that actual trade. So trading with an amount small enough that feels insignificant to you will allow you to follow your rules, remain disciplined, and do the things you should once you're in a trade. Now, you should never risk more than 5% of your account balance in any one trade. And if you have a larger account, you can reduce that to 2.5% or even 2%, still have a very sizable trade on, yet minimizing your risk. Okay. Also, never have more than 50% of your account balance active at any one time. And the reason for this is because there are so many factors that are completely out of your control when it comes to trading. And the most obvious example I can give you would be 9/11. The days of the attacks, they happened before the markets opened. The markets never did open and remained closed the rest of that week. And the problem was when they reopened the following Monday, they reopened at half their value. So if you had your full account in there, you would have taken a very sizable hit. by keeping half of your account balance on the sidelines, it allows you to recover and have the capital to trade and recover from any catastrophic event such as that. And in fact, just 6 months after the attacks, the markets were right back to the highs they were at before the attack. So had you had that capital there, you could have easily made your money back. Now, also never place more than 2 trades per day. The reason I say this, and all the examples I'm going to be showing you today are using daily charts, but the reason for this is there are going to be many, many setups to choose from. You should only be selecting the 1 or 2 best per evening. Spread them out. Yesterday's market action followed by today's market action is a perfect example of why we have this rule. Yesterday was a very strong update across the board. The Dow, the S&P, NASDAQ, Russell were all up strongly. So there would have been many setups, many bullish setups that you could have jumped in on first thing this morning. Had you did so, now the market's pulling back strongly. You'd be in a huge hole right off the bat. So the reason for this is just be selective, pick the 1 or 2 best, and spread your trades out. Okay. A couple other rules or goals that we follow here are, number 1, you will never go broke taking profits. I always urge our traders here, when they have a profit, take it, especially if you're a beginner. Get used to taking those profits, and as you get more experience, you will learn to stay in a trade a little longer and maximize those gains. But it's very important that you get used to banking those profits. Also, leave your ego at the door. This is not about whether you're right or wrong. That's important. It's all about how much money you make when you're right and how much money you make when you're wrong. Okay. Now, as far as this setup goes, our favorite trade setup, and what you will need to trade this, you can use any charting platform, free or paid. You don't need anything complicated. All that is required is a 20-period simple moving average. Now, I've yet to see a charting platform that doesn't have this. So, again, you don't need anything complicated. In fact, you won't even need the 20-period simple moving average. It's more of a visual aid than anything, and I'll show you why when I bring up my live charts. So, don't go out and spend money on new hardware or complicated software. If you're watching this webinar, you've already got everything you need. Now, the benefits of this system are, number 1, it works on any market, stock, options, futures, Forex, globally, any time frame, any price level. It's just basic technical analysis that works on any market. You don't need a lot of experience. You can be a complete beginner, or you can be very experienced at trading. This will be a great setup for you. It's very, very simple to spot on a chart. It has very clear entry and exit rules, and it can be used as a standalone system or as a complement to whatever system you're trading with now. Now, a bit of background on the strategy. When we first sat down to create a new strategy, we gave ourselves some guidelines to follow and some goals to meet. Number 1, it had to be something that was very simple to spot on the chart, very quick and easy, and we've accomplished that. Also, it can be used with any charting platform and be easy enough to use by any level of trader or investor. One of the musts here was that it had to have extremely low risk. And when you hear the rules we've wrapped around this, you'll understand why. And of course, as with any trading system, you want it to be consistently profitable. We have tested this over many years, back tested and forward tested, meaning with real money. We continue to use it today. It is very, very consistent. Okay? And the only components of the strategy, again, are the 20-period simple moving average, which is more of a visual aid than anything, and I'll show you in a moment. And we're also looking for engulfing candlestick pattern. Now, there's more to it than just this, but this is really all you're looking for on a chart, and I'll show you in a minute. Now, for those of you just starting out who might not know, a simple moving average is simply calculated by adding the closing price of the security for a number of time periods and then dividing this total by the number of time periods, just a straight average. And an engulfing pattern is a reversal pattern that can be bearish or bullish, depending on whether it appears at the end of a downtrend, that would be a bullish engulfing pattern, or an uptrend for a bearish engulfing pattern. And I'm going to bring up my live charts and actually draw it out for you and explain this for you, okay? Just give me 1 second to switch over here. Okay, so when we bring up our charts and want to look for this setup, there's a couple of things we look for. And number one, we're looking for trend and momentum, okay? So here's a chart of the Qs, which, you know, has been clearly trending higher. And when it comes to momentum, the way I want you to think of momentum is by the slope of the price bars, or, and this is where the 20-period simple moving average comes in, just the slope of the moving average. This is what we use as a visual aid. So in other words, think of momentum as this. You can have slight upward momentum, you can have more significant upward momentum, or you can have very significant upward momentum, okay? And the same goes for a downtrend. You can have a slight bearish momentum, you can have more significant momentum, or you can have very significant bearish momentum. So if we look in this area here on the chart, for example, if I draw the trend line right over the bars, you can see that there's very significant momentum here, okay? But using the 20, it pretty much does that for you, and that's really what it's used for, okay? Now, let me remove these drawings and draw something else for you. Once you have that trend and that momentum in your favor, your next step is to look for that engulfing pattern. So if it's an uptrend, upward momentum, then you're looking for a bullish engulfing pattern. And what this is this. Let's say we get a move higher and then we start getting a pullback, okay? So on that pullback is where you're looking for an entry and a continuation of the move higher. It's in this area that you're looking for that bullish engulfing pattern. And it's going to look like this. You're going to come across a candle followed by an even larger candle that completely engulfs the body of the prior candle. So when there's two things. There's the setup and there's the trigger. In this case, the setup would be the bullish engulfing candle. Now, when it comes to engulfing candlesticks, the wicks on the candle do not matter. It's simply the bodies that matter. So all you're looking for is a larger body that completely engulfs the body of the prior candle. And what this tells you is that this retracement is over and you're now going to reverse and continue your upward momentum. Okay? And a good example on this chart is right here. There was one right here. But I will zoom in a second here for you. There. So you can see here we had this move up, very significant slope. In this case, it was more of a sideways action than a retracement, but it slowed down and came back, and then here we get, if you look at the body of the green candle, it completely engulfs the body of the red one here. So the wicks don't matter. Where the wicks come in is on the trigger, because once you do get a valid setup such as this, what you're looking for to enter the trade is a trade above the high of the engulfing candle, the very high, including the wick. Okay? So in this case, on the Qs on this day, the high was 93.45. So you would have to wait for a trade above 93.45 before it ever trades below the low of this candle. Okay? So if you get that trade, and in this case it was on the second day here in this green candle, it traded above there, that would trigger your trade. It means you get long and your stop loss would go just below the low of that candle, meaning you're only risking the range of that one bar. Okay, that is your absolute maximum risk. And then you manage the trade from there. Now, if you were to get a trade below the low of this candle first, before it ever triggers high, that would negate the trade. So you would move on. It would be disqualified. You would not enter that trade, and you move on to look for new setups. Okay. Now, let me explain the bearish setup. It's the same, just opposite. Okay. In other words, you have significant downward momentum, then you get a pullback higher, and it's in this area where you're looking for some kind of signal that tells you that that retracement is over and that the downtrend will continue. And that's where the engulfing pattern comes in. You're going to see a smaller bar followed by a much larger bar. Now, I should say that the stronger setups, for a bullish engulfing pattern, the engulfing bar should close near its highs, okay? And opposite for bearish, it should close near its lows. But the entry rules are the same. In this case, for a bearish engulfing pattern, you wait for a trade below the low of the engulfing bar. If you get that, you enter your short trade, and your stop will go just above the high of the candle bar. And remember, when it comes to your trigger, waiting for the entry and putting your stop, the wicks do matter. So if there were wicks on either side here, you take the absolute high and lows into consideration, okay? Now, let me show you an example of bearish setups. And typically, when you get some very strong momentum on your side here, you get multiple setups along the same stretch of trend, okay? So the first setup here, you can see, actually let me back it up a little so you can see more of the slope. Let me draw this out for you. So number one, if you look at the price bars alone, which is really what you should first be looking at, you can see the significance of that slope. It's almost a 180 straight down, right? And you get that pullback. The reason why the 20 is such a great visual aid is because when you get that retracement or that pullback, if you draw that out, you could be thinking to yourself, wow, that's pretty strong momentum to the upside. And that could scare you out of the trade. Instead, the 20 helps you understand that that's merely a retracement before a continuation of that pattern. Now, let me zoom in a bit more here. When you get such a large engulfing bar like this, all that means is you have to assess whether you're willing to take that much risk. In other words, remember, once you get into that trade, your stop goes on the other end of that bar. So the range of that bar, the high and low range, is what you would be risking. So that's what you have to assess at the time of that trade. And typically, you know, if that's too much risk for you there, if the momentum is really that strong, you will get other opportunities to enter. In this case, you know, a week and a half or so later, there was another entry here. And again, remember the setup, the body of the candles is all that matters. And in this case, the body of this red candle completely engulfs the body of the candle to the left. You then wait for a trade below the absolute low of that engulfing candle for an entry. If you get a trade above first, it's disqualified. So a couple other things to mention here is that typically once you enter a trade with this setup, it tends to move in your favor immediately, which is great for some very obvious reasons. Number one, remember, trading is more about managing the trade once you're in it than it is picking an entry point. And if it moves in your favor and you're in profit right away, it'll be that much easier for you to control your emotions and manage the trade appropriately. So not only are you going to gain confidence in the system that you're using, but also in yourself as a trader, which is huge. And also, I noticed when I asked the poll question earlier, there's a number of options traders here. You can really use this to options to leverage this setup, but when a trade goes your way initially, it's even more important for options because of if it moves against you immediately, you get that premium decay, and to make that back, you need a much more significant move in your favor to make that premium back before getting into profit. So having something that moves in your favor immediately when you're trading options is absolutely critical. Okay, let me show you a couple more examples here. Here's a chart of Baidu, and you can see all this choppy kind of sideways action here, and then you get this momentum high, and you can see here on the bars how significant that move up was. Okay, You get a retracement. Let me zoom in here for you. Right here, you get that retracement. And then here's the engulfing bar, where the body of this candle completely engulfs the body of the candle to the left. In this case, it did trade above the high first. That was your entry. Stop goes just below the low of that bar. Or in this case, when you have another bar that's has a lower low, but very close to it, depending on how conservative or how aggressive you are, you may want to put your stop just below that low. Leave that to you. But again, remember, the distance from your entry point to where your stop is your level of risk, and that's what you have to be comfortable with. In this case, again, it immediately went in our favor, and actually the momentum continued on, and this was a very, very nice trade on Baidu. Let's look at a few others. Bit Auto Holdings, BITA. Here's another example of a stock that's completely moving sideways for many, many months, then suddenly starts turning higher. You see the momentum there. You get that pullback, and you get a very nice engulfing bar. Now, this is a great example I wanted to show you because a lot of people might think that you need a red candle followed by a green candle for a bullish engulfing and vice versa for bearish. But the color doesn't matter. What matters is that for a bullish trade, the engulfing candle needs to close near its highs. The closer it is to its highs of that day or that bar, the stronger the signal. Okay, so the color of the previous bar really doesn't matter. What matters is that the body is completely engulfed by the engulfing bar. Okay, so you get that set up, and it moves in our favor right away, pulls back again. We actually get another signal there, and off it goes. Okay, here's a stock, Southwest Airlines, that's been in a fantastic trend. This is the kind of chart you want to see when you're looking for trades. Okay, and then once you have that trend and momentum in your favor, you're just looking for a reason or an area where you're getting a better price to get in for the continued move up. And in this case, again, we had that momentum, we got that pullback, and here's our engulfing bar. Remember, it's only the bodies that matter for the setup. And in this case, the bodies were at the very same level at the top here. That's fine as well. Okay, this one doesn't have to be any lower than the high of this body. It can be at the same level as long as it doesn't exceed it. And in this case, this was an even stronger setup because this is also a hammer candle. For those of you familiar with candlesticks, not only did we get the engulfing, but we got a hammer candle right here, and you can see the kind of move and continuation of momentum that we had afterwards. I mean, that's exactly what you want to see. It never goes against you. Never sweat this trade at all. Now, here's an example using Visa of a trade that was negated or was disqualified. Let me zoom in here. So you have this momentum lower. Here you can see the 20, and if you measure it by the bars, you can see it's just as, if not even more, a more significant slope lower. Then we get that pullback, and right here is your bearish engulfing bar. This big red candle completely engulfing the smaller green body there. Okay, so what you would be looking for here is a trade below the low of that candle to go short, and then put your stop just above the high of that candle. In this case, unfortunately, it broke above the high first, which completely negates the trade, disqualifies it. You move on, look for new setups. So, in other words, the trades that don't work out, many of them aren't actually losses. They're just disqualified. Okay, so that's another nice thing. Now, I also noticed a few Forex traders on here. This works exactly the same, whether it's stocks, Forex, futures, it doesn't matter. It's technical analysis. So again, here we are. Look at this downtrend on the Aussie-New Zealand pair. Very, very significant slope. Okay, lower. And if I zoom in, what do we see here? There's a nice engulfing candle there. Okay, closing near its lows, and off it goes downward, which turned out to be another very nice trade. And then a few months later, after this choppy sideways action, we gain some momentum to the upside again. We get the sideways consolidation pattern, and there's your engulfing bar right there, and off it goes. So it works just as well. Here's the US dollar Japanese yen pair. Again, typically during a nice stretch here, okay, you get multiple entries. Now there's another thing I want to show you, is that when you get a sideways period of consolidation such as this sideways, and a number of people prefer to draw channels here and look for breakouts, right? So if you're one of those, this first trade you would have ignored because it would have still been considered within this channel here. And that's okay. It's okay to miss the odd setup because there's usually plenty to choose from. So it moves up. Once it breaks it, it pulls back, and there's, right in here, is your first engulfing pattern, which tells you this is your reversal point right here. The trend is going to continue, and in fact it did. About a week later you get another signal, and it just keeps going very nicely. Now also notice a few futures traders in here. Here's the gold futures, same thing. Here's a nice uptrend on gold, and there in here is your engulfing bar. Okay, breaks the high first, enter long, stop goes just below the low, and there it goes. Here's a chart of platinum, same thing. You see all this messy, choppy action, and then we get this downward momentum. Again, if up in here you were not sure whether this was just more chop continuing or whether we were going to break out, you would have ignored this signal. But once you're down here out of that sideways trend, here you get another signal right there, and pretty much straight down from there. So it's a great setup, works very well. Again, can be used completely on its own or as a complement to whatever it is that you're trading now. Now I see there's a number of questions. I'm going to bring on Raul here to help me out, and he's our coaching and education coordinator. He's going to help me read off some questions and read off symbols. If you want me to pull up a chart on anything, type the symbol into your chat now, and he'll read some off for me, and I'll analyze them with you. Okay?
Vinny, how you doing?
I'm okay. It's just my throat's starting to give up on me.
You got to stop drinking that brio,
Yeah.
More honey lemon tea. Okay, always great to be here. Special thanks to the folks at Investor Inspiration for letting us be a part of this. First symbol is Amazon from, I'm going to probably screw up the name, it's from How.
Okay, great. Thank you, How. Let's have a look at Amazon. Well, I mean, immediately to the left, and I should say once you get used to this setup, you'll be able to spot them on the charts very, very quickly. They kind of stand out almost as if they're in 3D. But you can see here this sharp momentum higher, okay, right here. There was earnings here which pretty much accounted for that gap up here, and then it pulled back. But what do we get right in here? It will zoom in for you. Okay, right here. See it? Let me draw that out. Right in here. You get that nice engulfing pattern right there, which tells you this retracement is over. It's now going to reverse and continue moving higher. And if I span out again, you can see just how nicely that trade did. So, again, it doesn't matter which market. It's all a matter of spotting the trend, the momentum, and then looking for the setup, following the trigger rules. Okay, let's see recently here. Now, this has been some pretty back and forth action on Amazon since its last earnings announcement. Okay, so there's currently no setup here. Today's bar, no, yesterday's bar had a higher body than today's bar, so that does not qualify. So there's no setup right now, but Amazon typically gives you several nice setups, so wait for another retracement, and then we should have another setup soon.
Thank you for that, Hal. Most popular symbol always, Vince?
Apple?
Yes, we were talking about this just as we were getting breakfast.
Yeah. Apple.
With people's iPhones bending in their skinny jeans.
Exactly. Apple's, quite the conversation, and actually this is another good example here. Just we were talking about it last night again. Let me zoom this in. Look at this engulfing bar here, okay? Now, there's a couple things to notice about this one. Number one, here's where the 20 period moving average comes in as a visual aid. You can see that the 20 had turned flat, okay? So we no longer had that momentum in place. Now, many people think, well, Apple, great company, great products, very profitable, and with the announcements of the new iPhone, etc., regardless of whether the market was pulling back, this would have been a good, gamble, I should say, even though I hate using that term, but you might have wanted to risk this one bar here on this trade, just because from what we hear, the sales numbers for the iPhone 6 are breaking all sorts of records. So if you had that mindset and you wanted to take this trade, here was your setup. I will zoom in again and highlight that for you. The setup was here, okay? But what didn't we get? This is a bullish setup, so you're looking for a break above the high. Well, it actually broke below the low first. So it wasn't a loser, but it's a disqualified trade. It's negated. So we move on from there. We don't look at it anymore. We move on. But Apple, there was another nice setup right in here on Apple. So, you will get plenty of nice trades on Apple.
Vince, we've got literally hundreds of people asking for symbols. We can do one more. I know it obviously works on stocks. Can we do one for Forex as well?
Oh, yes, sorry. I didn't realize we were almost out of time. Wow.
Yes. Can we do Canadian dollar, Japanese yen?
Sure. Let's have a Canadian dollar, Japanese yen.
And that's from Anthony.
Sure. Okay. So again, what are we looking for? We're looking for momentum. Here, let me make sure I have my drawing tool. Okay, right there, you have that momentum, and then you're looking for a pullback and a valid entry. There was a setup right in here. There's your engulfing bar on its way up, and I believe there's another one back in here. Okay, and again, it works on any time frame. If I switch down to say a 4-hour, okay, let's just have a look here. The highlighted one is that appeared on the daily that I just highlighted. Let me zoom in a little more here to see, but as you can see, let me remove this quickly. There is actually an engulfing bar right there, okay, and there's probably others here. There's another one right there, I think. So the time frame doesn't matter. The market, whether it's futures, Forex, stocks, doesn't matter. It all works very, very well.
I'll let you, a lot of people are asking about exits, so I'll let you talk more about that.
Okay, yeah, I mean, we've covered the basics here, but believe it or not, there are many things that actually enhance this setup. The exit strategies, there are several that you can use here. There's one in particular that myself and the other traders at TradeWinds use, and there's many other components you can add to this setup to make it even more effective, if you can believe that. But let me just bring up my slide and go over a couple things. Now, unfortunately, we don't have time to go over everything today. But for those of you that are...
We've got literally 5 minutes.
Yeah.
Can you do everything in 5 minutes?
No, it'll take me at least 2 hours to cover everything with you. So for those of you that are serious about making money with this, we have a pro class coming up on Thursday, October 2nd from 7 to 9 p.m. Eastern. I will be running the class myself, and it typically goes a little longer. The event will be recorded, but what I'm going to show you during that class is a very unique way of adding support and resistance to increase the accuracy of this setup by over 30%. I'm also going to show you how to use 2 specific Fibonacci tools to really enhance this. It really makes a big difference, believe it or not, even though what you've seen already as you can see, is very, very effective. Also in those 2 hours, I'm going to show you 4 additional trade setups that you can use. Again, all 4 work with stocks, options, futures, Forex, but they work in conjunction with that trend and momentum that we talked about. Work exactly along the same lines, very easy to spot, just great additions to what I've shown you here today. And the second half of that class next Thursday is where we're going to do a scan together for trades coming up for that following week. In other words, I'll go through chart by chart, share my watch list with you. We'll scan chart by chart looking for the setups so that we can all walk away with trades we can put on immediately after the event. Okay? The way to sign up for this is just go to tradingwins.com/pattern. Hopefully we can have that put into the chat window there, so you can just click from there. Okay? But let me tell you what you're going to get when you sign up for this class. Okay? Number one, you won't have to wait till next Thursday to get all the details. We're going to send you a recording of the previous pro class we did, which was last Saturday. And that alone, we normally sell for $297. Also, we're going to reserve a seat for you at the live event, regardless of whether or not you view that recording. And we're going to throw in a 30-day membership to our pro service. And our pro service, what we do is we record videos nightly from Sunday to Thursday where we recap what the markets did that day, where we think they're going next. We review all our open positions, and we share new trade setups with you. And we have different traders here that use different setups. We also have several trading strategies that we haven't released to the public. And the trade setups we share with you on those videos are from all those systems and all those setups. So there's a lot of value there. We also give away a lot of just technical analysis tidbits. As we go through and analyze the charts, we highlight what we see. So it's a great learning experience. So for any of you on here today, you won't have to pay anywhere near that $691 price. What we're offering today is just everything for $97, okay? Again, it's tradingwins.com/pattern. Now, we do limit this to 25 people. The class last Saturday was 2 hours and 45 minutes long. You know, we get a variety of people, from beginners to experts, so there's a lot of different questions. We want to make sure we answer all of them so that you can all walk away from that class ready to trade that system immediately. The benefit of the previous recording is you can view it as many times as you like before the live class. Make a note of any questions, anything that you're unclear of. Bring those questions to the event, and we make sure we answer them there for you, okay? That's why we have to limit this class to just 25 people. Also, even though you get that previous recording, we will also record the live event on October 2nd and send you a recording of that. And I encourage you to watch that recording again at least twice over the 2 weeks following the event, just for repetition's sake. And there is so much material we cover that you're bound to miss something during the class. So it's great to go back and pick that up. Raul, if we have any time left for any other questions.
We do. We've got a couple of minutes. I just want to let Jane, Mark, and Gary know that your orders did go through.
Great.
Thank you. Looking forward to seeing you on the 2nd. People are asking, is it patterns or pattern? So it's tradingwins.com/pattern.
Pattern, yes, singular, no S, pattern. If you have any trouble ordering.
Lena was asking, is there a phone number? It's 1-888-574-2426. The guys are putting in the chat window right now as well. The session will be recorded, the pro session?
Yes, absolutely. We'll be recording again. I encourage you to watch that recording at least twice after following the session. And once you sign up today, the previous recording will be sent to you within the next 24 hours, correct? Right.
No, money back guarantee. If you're not happy, do we want your money?
No, and we don't want, we're not here to sell you something you can't use. So, you know, if you sign up today, you're going to get that previous recording in the next 24 hours. You can watch it. If you're not happy, just give us a call.
Before the live event, and
that's right.
You'll get an idea of what it is that you're getting in the live event. The live event, though, is very powerful because you talk about trade setups.
But again, you know, what I've shown you today is the setup. I'm going to add other ways that you can really increase the accuracy and really leverage the system with. I'm also going to cover some information on options. Since we had several option traders on here, I'm going to tell you how far out you should go expiration-wise and what kind of delta you should be looking for, that sort of thing. We won't have time for any sophisticated option strategies, but the basics we will cover.
I don't like doing this to you, during the live webinars, but I'm going to read a testimonial that somebody just sent in with us from one of our existing members. Aaron says, Vince, thank you so much. I attended the 3 Simple Steps to Profit webinar in June. I had a trade on Nike. It was a long trade, and I made $380 on that trade, more than enough to pay for the cost of the webinar.
Excellent. Love hearing that.
Thanks so much for that, Aaron. Always nice to see you here on the webinar as well. People want to know, do they need any special software to be able to use the system in the profile?
No, any of the free charting software out there available is fine. Again, the only indicator you're going to be plotting on there is the 20-period simple moving average, and I haven't seen any charting platform that does not have that on there. So,
God, I wish I had more time. Lots of quick questions.
Sure.
Earnings, how do you deal with them?
We prefer to stay away from earnings, but again, we'll cover more of that in the class in detail, yeah. And for the pro membership, again, the first 30 days are complimentary included. At the end of the 30 days, if you're happy with it, you don't need to do anything. It'll automatically renew at $97 a month. If you'd rather not continue, then just give us a call and we'll cancel that for you.
This used to be a $297 course, I remember.
Absolutely, it is.
Recently. The reason we're doing it for $97 is because we have 25 people on. There's a lot of great speakers coming up after us. A lot of them will have excellent things that they'll be giving to you. So it's not that we're saying, you spend your money now. We really do limit it to 25 people. Why is that again? It's
simply because of the time. Again, the last one went 2 hours and 45 minutes. We want to make sure we answer all your questions so that you're able to walk away from that event ready to trade this completely on your own. So for us to get to everyone's question, we do have to limit it.
Vince, I'm sorry, I've got a lot of questions, but I know this is the end of our time. A lot of people are asking. Jennifer and Toby's asking, they're having some trouble with ordering. Online, it's tradingwins.com/pattern. We are on live chat if you have any difficulty at all. It's only $97 for $691 worth of value. And if you don't see the value in it, just give us a call back.
But there's so much covered there, from previous classes. With the questions that come up from the different people we have on, from people that are very experienced versus complete beginners,
right.
There's a lot of other technical analysis questions that come up that we cover anyway. So it's a great value for that price.
Okay. Last thing I want to say, a lot of people are trying to log into the site after having signed up. I see Philip and I see Tony, I see Yolanda trying to log in. The minions here will set up your account. It'll take probably the rest of the day to do that. So we will set it up for you and you will get the email confirmation that your account's been set up. If you have any questions, info@tradingwins.com. We're on chat and 1-888-574-2426. Vince, awesome time. Thank you so much. The folks in Investor Inspiration, I don't know what to say about them. It's just, they're always so kind to us. We really do appreciate it. I'll let you have the last word.
Thanks for having us on. Really, really do appreciate it. I hope everyone enjoyed the presentation.